Good morning, this is Tim McGowan for the Finance News Network. The Dow Jones Industrial Average rose Friday, notching a gain during the holiday-shortened trading week. Worries about continued lockdown in China, however, kept markets in check. The country is ramping up COVID restrictions after seeing climbing case counts in recent days. However, unprecedented demonstrations are now breaking out across Chinese cities and university campuses. These are the biggest protests in China since Tiananmen Square. This week also sees the speech by Fed Chair Jay Powell, which will have a big impact on markets, especially as it will be his last speech before the important two-day Fed meeting in mid-December. This week is also very busy in Australia with lots of data, especially on house prices and retail sales, plus a string of company annual meetings. The Dow Jones Industrial Average closed up 0.45%, the S&P 500 was flat, and the Nasdaq fell 0.5%. All three indexes ended the week higher. The Dow was up 1.78%, the S&P 500 1.5%, and the tech-heavy Nasdaq is lagging the other two indexes, but still up 0.7% in the same time frame. The real action, of course, is in the corporate bond market, with investors having poured almost $16 billion into the US corporate bond funds this month, underscoring how signs of easing inflation have helped brighten sentiment after a brutal sell-off in March of 2022. Funds holding high-grade bonds have attracted $8.6 billion of new client money in the month to November 23, while those focused on the riskier junk-rated debt have posted net inflows of $7 billion. The surge of inflows into credit funds comes after data released early in November showed the pace of consumer price growth has started to ease, prompting hopes that the Fed Reserve may soon slow down its aggressive rate hikes. Investors appear to be keen to lock in higher yields after this year's sell-off sent them soaring. The average yield on the ICE index of high corporate bonds is 5.4%, down from an October peak of more than 6%, but well above the 2.4% from the end of 2021. It looks like investors are positioning themselves with the view that rates are about to peak. Across the sectors over the weekend, energy continues to underperform as oil prices fell on Friday in thin market liquidity, closing a week marked by worries about Chinese demand and haggling over the Western price cap on Russian oil. Worst performing thematics over the weekend included lithium stocks, Chinese listed companies and streaming companies. On the futures today, the SPI futures are pointing to a flat start. This is Tim McGowan for the Finance News Network. Have a good day.